We will be looking at donation tax and trusts. This will be the last session that we do on donations tax and trusts. So it's going to be just a quick background on donations tax again, and then we'll do 2 questions, one on donations purely, and then the other one will be a combination of donations tax and trusts. So yeah, let's get started. Please participate, guys. Don't leave me hanging. I know you guys know the information already. So let's do this together. Let's help each other so that we can get this right. Okay, so let's just see our background on donations tax. What can you guys remember on donations tax? Can you share anything that you can still remember from the previous session that we had on donations tax? How does it work? Why do we have donations tax? Why do we have donations tax? Just guess, 81. Why do we have donations tax? What do you think? What is your personal view?
I think donation tax is there to tax donations, because a lot of people are donating to evade tax.
Correct.
So that's why it's also taxed.
Thank you. That's correct. Thank you, Charlotte. So donations tax is more of a punishment because people are trying to get rid of their assets. They're moving their assets into somebody else's names. And so Treasury and SARS decided that we are going to tax these people because they are moving their assets into somebody else's name, and then they're avoiding getting taxed on those assets, be it now during estate, be it now through avoiding CGT consequences, or trying to avoid estate duty in the future when they die. So if you, is there somebody speaking? Okay. So if they die, they try to avoid estate duty so that they have less stuff in or less property in their estate. So they pay less tax on that estate. So can anyone still remember how much, what is the rate of donations tax? How much are we paying? Or what is the percentage of donations tax that we are supposed to be paying?
Is it 20%?
Yes, you're right. You're half right, 20%, yes, but on what?
25% when they exceed 30 million.
Correct, thank you. So if it is less than 30 million in aggregate, we are taxing you at a rate of 20%. So if all your donations for the year are less than 30 million, then you will be taxed at 20%. Anything exceeding the 30 million, you'll be taxed at 25%. So then let's go through the information that we have with regards to donations tax. So section 54 tells us that donations tax must be paid, and then section 55 is where we get our definitions of donations, and it tells us that a donation is when we give gratuitous disposal of any property, including a gratuitous waiver or a renunciation of a right. So if you decide that you're giving somebody a loan in 2024, and then, let's rather say in 2022, you gave somebody a loan, and then come 2024, you decided, listen, that loan that you still owe me, I'm gonna just give it to you. You don't have to pay me back. That will also be seen as a donation because you're now waiving your right to actually ask that person for your money back. Even when you are deciding that you're gonna waive interest on a loan, that's also seen as a donation. Remember, we spoke about section 7 cap C last week, so that's also included as part of a donation. Then we have the definition of a donee, and it says that it's somebody who benefits from the donation. So whenever you're giving a donation, that person who receives the donation is the donee. Then we have our fair market value, and this is important because when we are determining the donation, we look at our fair market value to determine how much donations tax we're going to be paying on that donation that we are making. So they tell us that the fair market value means in this section, the A part says the price which could be obtained upon a sale of the property between a willing buyer and a willing seller dealing at arm's length in an open market. Or B, in relation to immovable property on which bona fide farming undertaking is being carried on in the Republic, the amount determined by reducing the price which could be obtained upon a sale of the property between a willing buyer and a willing seller dealing at arm's length in an open market by 30%. So that means if you have a property where bona fide farming activity is taking place, then you are going to take the value that you could have gotten minus the 30%. So you would only take the 70% as your fair market value for that property, immovable property that you use for bona fide farming activities. Then we also have the definition of what a property is. It tells us that it means any right or in or to property movable or immovable, corporeal or incorporeal, wherever so situated. Sorry. So it doesn't matter where the property is, as long as it's a property that you own and you decide that you're donating it, there's going to be donations tax, except for where there is an exemption. And we're going to see the exemptions just now. And then section 55B also tells us that a donation takes effect when all the formalities are complied with. So if there's an oral agreement, it will be on the date that you actually give the donation to that person or the property to that person. If there is a written agreement of some sort, or there must be a transfer at the deeds office, then on the date that that property actually gets registered in that person's name, then the donations is then seen to be taken effect. Then section 64 tells us our rate that we use for the donations tax. And as mentioned already, it is going to be at 20% in aggregate if all your donations are less than 30 million rand for the year. And then if it's more than 30 million rand for the year, it's going to be 25%. Whatever exceeds the 30 million will be 25%. So everything up until 30 will be at 20%. Then whatever exceeds the 30 million will then be at 25%. Okay, so our exemptions, we have quite a number of exemptions that are mentioned at section 56, and these are important for us to know because this will determine whether or not we will have a donation on donations tax on a specific transaction, on a specific donation that we make. So if there is a donation in terms of an antenuptial or postnuptial contract, this will be between spouses. Section 56(1)(a) tells us that this transaction or that donation will be exempt. Section 56(1)(b) tells us if there's a donation between spouses that are not separated, that will be exempt as well. So if the spouse, the spouses are separated, then there will be donations tax on that transaction. But if they are still together, then there will not be any donations tax because it will be exempt in terms of section 56(1)(b). Then there is also in contemplation of death. If there's a donation that you make on your deathbed, and you see that, okay, listen, I'm about to die, I'm going to donate my assets, I'm going to start giving away the assets to people, and then that will also be exempt from donations tax. Why do you guys think that this will be exempt from donations tax?
Sorry, is it not because you'll be liable for estate duties?
Thank you, Nolwazi. That is correct. That is why they won't make you pay donations tax, because all of those assets that you're busy saying you're donating because you're about to die, the condition is you're about to die, and you're donating those things. because you see that you're going to die, you want to get rid of your assets, but then SARS and Treasury said, no, listen, it's fine, you can donate as much as you want, but come, if you know that you're doing this in contemplation of death, know that you're still going to be liable for estate duty on those assets, on that property that you're busy donating while you're on your deathbed. So because of that condition that you must die so that the person gets the asset, then estate duty will then be applicable. Someone asked in our last session what happens with regards to assets or properties that are donated in contemplation of death. This is what happens. It will be exempt for donations tax purposes, but you will still be liable for estate duty when you, as part of your estate, so that those assets will still be part of your estate, and then you will then have to pay, you may be liable for estate duty, and once we go through estate duty on Saturday, then you'll see exactly how we do the calculation for estate duty. Then I hope your question was answered. I can't remember who asked the question, but I hope you're answered now. Then 56(1)(d) tells us that if you will only, if the donee will only receive the donation after the death of the donor, the transaction will then be exempt. 56(1)(e) tells us if it's cancelled within 6 months of the donation, it will also be exempt. 56(1)(f) tells us that if you make a donation to a traditional council, traditional community, or a tribe, as defined in section 10(1)(t) v, I don't know if that's 8, I think that's 8, yes. Section 10(1)(t)(8), then it will also be exempt. Then our next exemption is in terms of section 56(1)(g). If you are donating property that's situated outside of the Republic, then okay. If you're donating property outside of the Republic and such property was acquired before becoming a resident of the Republic, or you inherited from a person who at death was resident outside of the Republic, or you are making donations from out of the funds that you got from a disposal of the property that is situated outside of the Republic and you acquired before you became a resident of the Republic, or it was inherited from a person who at death was resident outside of the Republic, or if you then disposed of the of a property that you got from that you acquired before you became a resident, or you inherited from a person who was at the time of their death was a resident outside of the Republic, and then you replaced it with another property, that property also will then be seen as being exempt. If it was out of the funds that were derived from the disposal of the second property that you acquired, with the condition that it was acquired before you became a resident, and or you got it from someone who, when they died, was a resident outside of the Republic. So it's just saying that if you got the property in terms of, if you got a property outside of the Republic and that property was acquired before you became a Republic, or that property is inherited from someone who died who was not a resident of the Republic, then that property is exempt. Any money that you got from that disposal and you're donating it, exempt. If you replace that property and you got another property or properties, then it's also going to be exempt if you donated, or if you got funds from the disposal of that second property that you acquired, it would also be exempt from donations tax. Okay. I hope you guys understood that one. If not, please do ask. Okay. Then if you make a donation, or if you are a person who is a person part of the government, any sphere of the government, be it local, or that are being defined in section 10.1i, 10.1a, 10.1c cap A, 10.1c cap E, C cap N, C cap O, C cap Q, D or E. These are the government spheres. If they make a donation, or if they receive a donation, that whole transaction will then be exempt from donations tax. And then, yes, someone is saying something. Then section 56.1k says that if there's a voluntary award that would have been included in the donee's gross income, as part of paragraph C, D, or I of the definition of gross income, that will be exempt. Any voluntary award that resulted from the gain in respect of which it must be included in their gross income in terms of section 8 cap A, 8 cap B, 8 cap C, then that would also be exempt from donations tax. That makes sense because that transaction will already be taxed with normal tax and normal income tax transaction. So it wouldn't be fair to tax it again for donations tax purposes. Okay. Then we have a few more. This is the last ones. Exemptions. If in terms of section 56.1l, a distribution by a trust to the beneficiaries, section, because you would be taxed on those amounts, so it wouldn't be fair for that to also be included as part of donations tax transactions. Section 56.1m, donation of a right other than a fiduciary or usufructuary interest to use or occupy farming property to a donor's child. So if let's say my father then decides he's going to be donating a right to use or occupy a farming property, he donates it to me, then there wouldn't be donations tax on that transaction. Section 56.1n tells us if a donation is made by a public company, that would also be exempt. Section 56.1o, donation of a property in full in terms of land reform program or national development program, or plan rather. Section 56.1r tells us a donation between companies in the same group would also be exempt. Then section 56.2a tells us that if a company or someone who's not a natural person makes casual gifts for the total of 10,000 rand, then those casual gifts will then be exempt. Casual gifts are things like birthdays, Christmas, or wedding gifts are seen as casual gifts. But anything more than that will not be viewed as a casual gift, and they would then not qualify for that 10,000 rand. You wouldn't give them a portion of that 10,000 rand. They would not qualify at all, so you would not give them any exemption in terms of section 56.2a. And that's if it's not a natural person. They are the ones who would then use that 56.2a. But now natural persons get an exemption of 100,000 rand in terms of section 56.2b. And then if you are maintaining someone, a bona fide contribution to the maintenance of any person, provided that the commissioner considers that maintenance to be reasonable, then that would also be exempt in terms of 56.2c. So if I live with my mother and I am maintaining her, that amount would then be seen as, even if she doesn't live with me, she lives in the villages somewhere, and I am maintaining her every month. I'm giving her money for groceries, whatever expenses that she has, then that would then be seen as a contribution to the maintenance of that person, and it's bona fide. It's not something that is extravagant. I'm not giving her extra money so that she can live lavishly. Okay. So those were our exemptions. Those are very important for us to remember when we are answering or a client or even in our exams. So then section 57 tells us that donations by companies will be deemed to be a donation by the person, usually being a shareholder who instructed that donation. So it's an anti-avoidance provision. What it's actually trying to curb is a shareholder who has a majority share, maybe in the company, trying to make donations using the company so that they don't have to pay the donations tax in their own capacity. What then section 57 tells us is that you will then tax the shareholder for the donations tax. Then they are then responsible for the donations tax. The company will not be seen as making that donation. And also, the value that you extracted by way of that donation will then be seen as a dividend to that specific shareholder. So if I am a shareholder of company A and I say to company A, listen, make a donation to my uncle of 100,000 Rand, then I will be then liable for that donations tax, and the company will then also pay dividends, or will have to withhold dividends tax for that 100,000 Rand transaction that we just did for the donation. Then section 57 cap A tells us that spouses that are married in community of property are deemed to be making 50% of the donation of that specific asset, or that forms part of their joint estate. So if my husband and I make a donation to, let's say, a cousin, and we made a donation of 300,000 Rand, 150,000 is going to be deemed to be made by myself, and the other 150,000 will be deemed to be made by my husband. And then we will all then have our 100,000 exemption each. So then I will then have to pay donations tax on the 50,000 Rand, and he will have to pay donations tax on his 50,000 Rand. So we go 50-50 if we are married in community of property. If not, this does not apply to us. Okay, are you guys still with me so far? No questions? Are you fine? Just a thumbs up, please, from anyone. Then section 62 tells us how to calculate our fiduciary, user factory, or other like interests. So who can tell me what a user fact right is? What is that? What is a user fact and what is a dominium?
This usually applies to land. A user fact is the right to use the land, for example, and then the bare dominion, you own the land.
Correct. So you actually own the property. So the user fact is the use of the fruit or income from the property. That holder has a limited interest and they cannot dispose of the property because of that limited interest that they have. And they also cannot bequeath it to someone else. Whereas a bare dominium is the ownership of the property without the benefit of the use of the fruit or the income from the property. That person can only sell the property subject to the user fact, which belongs to somebody else. So they can't bequeath their bare dominium to somebody else. Also subject to the user fact. So now there are steps to calculating the limited rights. So when we calculate our user fact or the fiduciary interest, we would first determine our fair market value. Then we want to calculate our annual value, and we do that by taking the fair market value of that specific property and multiplying it by 12%. Just take note that annual value of books, pictures, statuary, or other objects of art you would use the average net receipts derived from that property during the preceding 3 years from the donation. So you wouldn't take the fair market value multiplied by 12%, but instead you would take the average net receipts derived from the property during the 3 preceding years from the donation. Then you would then move on to determining what is the shortest period between the 3 periods, which is the life expectancy of the donor. You would look at their next birthday. If it's not a natural person, then you would take 50 years and you would look at the table B, whereas if it's a natural person, you would use the values in table A. The life expectancy of the donee, you would look at the next birthday as well. And then same rule applies if it's not a natural person or any specific period attached to the right. And that you would also use table B as well. Whichever one of the 3 is the shortest period, then you would use that. So then from there, you would take the annual value that you've calculated and you would multiply that by the shortest period above. So whatever the factor is from the tables, you would then multiply that by the annual value, and that would give us our usufructuary or fiduciary or other like interests. So we will do an example of that just now. Then working out our bare dominium, it's the same steps, except for step 3, where we need to determine the shortest of 2 periods, the life expectancy of the donee, looking at their next birthday. And then a specific period attached, or a specific period to the that is attached to the right. And then you would capitalize that, the annual value over the shortest period. And then you would determine your bare dominium by taking the fair market value less the usufructuary determined above. Okay, so that is our knowledge that we have. And now we are going to apply the knowledge that we have. There's no questions thus far. We are all still fine, right? Okay, so our first question tells us, using the following table, calculate the donations tax payable by Jack Black as a result of the donations he made during the period 1 March 2023 to 29 February 2024. Yeah. Here is our information. It tells us that Jack Black is a South African resident. He was born on the 19th of August, 1950. He made the following donations during the 2024 year of assessment. The first transaction, the first donation that he made was on the 1st of March 2023, where he gave his wife Jessie the family residence, which had originally cost 75,000 Rand in 1970 when Jack bought the house. This house was valued at 890,000 on the 1st of March 2023. How do we treat this transaction?
I think this one is exempt from donations taxes. It has been donated to his wife. So I think this one is exempt from tax.
And what section are you using?
It's section 56(1)(a).
Are you sticking with A?
Yeah, I'm
Okay.
sticking with A.
Non-Lwazi?
Sorry, I was actually gonna say the same thing with Tsepo, but I was gonna say that we don't really have enough information, because we also need to know if they're married in community or property or not.
Okay, non-Tlanhla? I think I saw non-Tlanhla.
It's section 56(1)(b), donation to house. Then it's fully exempt.
Correct. Thank you, non-Tlanhla. So you guys are correct in saying that it will be exempt. And the specific section that you need to use is section 56(1)(b). So there wouldn't be any donations tax payable on this transaction. So going back to the format that they gave us, The date would be the 1st of March 2023. The donation would be the donation of the property, or you can say donation to Jesse. And then the amount of the donation, what would be the value of the donation?
890.
Correct. So we would use the 890,000 Rand because that is what the fair market value is. That's what a willing buyer and a willing seller would then transact for. And then our exemption would then also be 890,000 Rand. There wouldn't be a taxable amount. There would be no tax. And our reason is section 56(1)(b). Exemption between exemption donation between the spouse. Okay, then they tell us that on the same day, moving to point 2, on the same day, he also donated his farm in Botswana to a friend, Blackie White. On 1 March 2023, this farm had a market value of 500,000 Rand. Jack inherited this farm from his late father on 1 March 2002. His father had been a resident of Botswana all his life. How would we treat this transaction?
But I think it's also exempt since he got it from his father, who at his death was not a resident of the Republic.
Next person's hand was, where did the hand go now? Thank you, Nikla. Next person's hand, where did that hand go? Larato, yes, please.
I will say exempt, section 56(1)(0). Oh, yes. Donation of property in full in terms of land.
Let's go back to that specific section that you are referring to. There it is. Okay. You see, it says here in terms of land reform program or national development program, or plan rather. So this wouldn't form part of the land reform program. I think the land reform program is when you go and you say, this land should have been part of our families, and this is the proof that you have. That's what they're referring to here, and not just any piece of land that a person has. Okay, thanks for your attempt. So the specific section that we would apply here would be section 56(1)(g) 2, because this is a property that is situated outside of the Republic, and that property was inherited from someone who is a resident outside of the Republic. So Nikla, you were correct in saying that this would be exempt, because number one, the property is not in the Republic, and he inherited it from someone who was never, or at the time of his death, he was a resident of Botswana. So what would have been our value? The 500,000 would have then been our value of the donation. Yeah, that would be the amount of the donation. The exemption would be the full 500,000 Rand. There would be no taxable amount, and there would be no tax. And then the reason would then be section 56(1)(g) 2. Okay. Is everybody happy with that one? Are we satisfied?
Can I ask a question, please?
Yes, you can.
So there's 2 points here that make it exempt. That firstly, the farm is in Botswana, and then secondly, that the father initially owned the farm and he was not a resident. What if the father was a resident? Would it still be exempt because the farm is in Botswana?
No, it would not be exempt. So the terms and conditions that apply to this specific exemption is that the property must be outside, and it's either you acquired it before you became a resident, or you acquired it from someone who at their death, you inherited it from someone who at their death was not a resident of the Republic. So if the one is not met, then you cannot apply that specific exemption to it.
Okay, thank you so much.
All right, awesome. Okay, so then number 3, then they tell us that he waived a debt owed to him by his cousin John Smith, a full-time university student to whom he had lent 12,000 Rand on the 1st of May 2022 at an interest rate of 8% per annum. The capital and the interest due were repayable to Jake on the 1st of May 2023, the date he waived the loan. How would we treat this transaction?
Can I try?
Yes.
I'm not too sure of the section, but I think it's not exempt for donations tax because he waived the rights to receive the money. I'm just not too sure. I don't remember which section you said is not applicable. Is applicable to this.
Okay. So we would then look at our definition of what a donation is. So our donations are found in section 55. So this would then be viewed as a donation. So that would be correct in saying that he would have to pay donations tax on this transaction. But then tell me, what is the value of our donation?
I think the value of the donation, it has to be a fair value. So I'm not too sure if we have to find the fair value of 12,000. I'm not too sure.
Okay. No,
Yes.
that's fine. That's okay. Deboho? Then non-plancha afterwards.
Isn't it going to be exempted under section 56(2) because of the value? Because it's less than 100,000.
You're 100% correct. 56(2) what?
I have
56(2)B.
Someone helped you there. They said 56(2)B.
Yes.
Yes.
Okay, thank you.
Who was that?
Was Lerato.
Oh, okay. Thanks, Larato. Non-plancha?
Okay, I wanted to come with the amount. We're gonna pay them the 12,000 plus the 8% interest.
100% correct. So you would have to determine how much your 12%, the 8% interest on that 12,000 Rand would be. So it's just going to be for that 1 year, because it ran from the 1st of May 2022 until the 1st of May 2023. So that's just for 1 full year. Had it been for more than that 1 year, then you would have to determine the 8% per annum, but now it's just for 1 year. So in this case, then our 8% of 12,000 Rand, I think it was 960. Yeah, 960 Rand. So in this case, our date would have been the 1st of May 2023. Our donation was to John Smith. Our capital was the 12,000. The interest was the 960. So our total amount is 12,960. Our exemption in terms of section 56(2)B was going to be the full 12,960 Rand. Okay. So that is just our general annual exemption. So don't forget, if it doesn't meet the exemptions in terms of section 56(1), then we need to look at the possible exemptions in terms of section 56(2)A, 56(2)B, or 56(2)C. 56(2)A would only apply if it's not a natural person, so it wouldn't apply in this instance. 56(2)B would apply because he's a natural person, and there's that 100,000 Rand annual exemption. And then 56(2)C would apply if he's maintaining someone, if he's maintaining anyone that he knows. Okay, so then we move on to point 4. Then they tell us that on the 1st of August 2023, he gave 20,000 shares in Rugby Limited to his younger daughter, Vincy Black. On the 1st of August 2023, Rugby Limited share had a market value of 8 Rand. Excuse me. Jake Black paid 100,000 Rand for these shares in Rugby Limited. How do we treat this? Yes, Tsepo.
I'm not sure, but I want to give it a try.
Please.
Since it donated 20,000 shares and he only paid 100,000 for it, and they had a market value of 8 Rand. So I think 160 must be must be subject to tax, but with the taking the annual exclusion in mind, and we have already excluded 12,960 from it, so it means we are left with 87,040 Rands. So it means that the portion that will be subject to tax will be 72,960.
100%. Thank you, Tsepo. So in this instance, we would still have a portion that would be subject to donations tax. So this is where our donations, or the first transaction that we're going to have to pay donations tax on. And as Tsepo correctly mentioned, that it will be the taxable amount would be 72,960. And the rate that we would use is the 20% because it's less than the 30 million. And then our tax would then be 14,592. Thank you. Then our next transaction was on the 1st of December 2023, where he gave Gary, a younger brother who was then 35 years old, a usufruct on 2/3 of a commercial building Jake would own for the remainder of Gary's life. On the same day, he donated to Bakis, a nephew, who was then 16 years old, the 2/3 share in the commercial building, subject to Gary's usufruct. On 30 November 2023, an independent third party valued the commercial building at 1.2 million. How do we tackle this one? So there's 2 transactions here. He gave his brother Gary the usufruct, and then on that same day he gave the bedominium to Bakis, the nephew. So let's start with the usufruct calculation for Gary. How do we then, where do we start? What do we have to first determine? Hi, Tsepo.
I think the market value of the property is 1,200,000, and the annual value to be included should be multiplied by 12%.
Correct. And then from there, where do we go? Who's going to help Tsepo from there?
We we check for the life expectancy of the donor and the donee, and then I think I'm stuck from there.
Okay, Nolwazi.
I was actually gonna go to the life expectancy tables of the donor and the donee, and then would use that value. We found that we multiplied by 12% of the property, would multiply it with, I think, with the life expectancy tables. So we'd find Gary's birthday and the and the brother that he donated to, and then we add per a year. I don't have the expectancy tables.
That's fine.
But along those lines.
Okay, so how old is Jake? I keep saying Jake. How old is Jake?
You
They tell you when he was born.
No, it says that he would own it for the remainder of Gary's life. So I'm not too sure.
Look here, the first sentence in our background.
Oh.
This is how they get you.
Yes.
So this is how they get you.
74 years.
Who said 74 now?
Charlotte.
Oh, thanks, Charlotte. So he will be 74. How did you determine that he's 74?
Is it not 75?
No, he is 74 years old. So when we go to the table, what age are we going to use? Are we using 74 or 75?
No.
Hello?
Akiri, he's born 1949. Are we not saying 1949 minus 2024?
He's born 1950.
1950.
Oh, I'm in the previous study guide. Okay, sorry.
So he's born in 1950. So he is 74 at the moment, when the transaction takes place. So we want to look at his next birthday when we go to the table. And that would be when he is 75. So in the table, I should have wrote the table so we can look at it. Yes, Deboho?
No, sorry to disturb you.
No, it's
but
fine.
on the 1st of March, he won't be 74 yet.
When did the transaction take place? On the 1st of December.
Oh, sorry. Sorry.
No, it's good that you're making the mistakes now and not in the exam. So you need to look at your dates carefully. He would have turned 74 already in August. Then after his birthday in August, he made that donation to his brother on the 1st of December 2023. I just want to see if I can find the table quickly so that I can show you. Does everybody know how to use the table? Can I read it from my paper, or do I need to show it to you guys?
Please share.
Please show.
Okay, let me get the table. Yeah, my assumption is everybody will have their books with them. I'm hoping my assumption is correct. It says it's on page 847 of the textbook.
Yes, it is.
Okay.
Until 849.
Perfect. So you guys can use your textbooks. Forgiveness. I asked for forgiveness. So you guys must just use your textbooks. So we would first look at the donor's date, next birthday. So his next birthday would then be 75, because right now he is 74. And we determined that by taking 2024 less than 1950, and we got 74 because his birthday has already passed in August. Hi, Nonhlanhla.
I've tried to take a picture from the last page since he's 74. So
Okay.
I've tried the last picture, so I'm not sure if it's clear. I've added it on the chart.
Okay, but then you must also add the one for Gary because he's 36.
36.
Yeah,
Okay.
he'll be 36 on his next birthday.
Okay.
So looking at the table that Nonhlanhla just shared, what is the factor that we would use for a male who is 75 years old?
Okay, Tina.
Yes.
It's 4,73490.
4,73.
No. 7,41.
Hey? Say that again. Take
I'm
your time.
now.
No, don't run away. Why are you running away? Don't run away. Tebogo, don't run away. Let's do this together. And get it. So we're gonna look at whose life expectancy will be shorter. So in this case, it'll be Jake's.
7,41.
What happened? So Jake's life will be the shorter life expectancy between himself and that of Gary. Gary's one would have been, because we are looking at his next birthday, which would be 36. So his life expectancy will then be 39 sorry. You see, I'm also making the same mistake. He's a male, so his life expectancy would be 33.05. So that would be longer than Jake's one, who his life expectancy would only be 7.07. So that's the shorter period. So then we would use his factor, which would then be, using a ruler, 4,73490. Tebogo, is that what you had?
Yes.
So why were you running away? Am I looking at this wrong? No, I'm not. The memo is not right. Father. Anyway, the memo is not correct because his next birthday should be 75, not 74. Because his birthday is already passed.
I think that this question was from an older.
Yeah, I think they didn't adjust it. They didn't adjust it correctly, because here it says 1950 instead of 1949. So then that is not right. So then they worked on the life expectancy of someone who is 74 instead of 75, which is then incorrect.
Yeah.
So it should have been that if on his next birthday he should have been 75, then we should have used 4, oops, now it closed it on website. Then it should have been the 4,73490. But then let's work with the solution that we've been given and use the 74 as his next birthday. Working on the assumption that he was born in 1949. I'm going to change this to 1949 so that the answers make sense. Okay. Is that fine with everyone?
Yes, thank you.
Okay. Nonhlanhla, your hand is up.
Oh, excuse, it's when I was saying I will send picture.
Okay, perfect. So let's take it step by step. Our first step would then be to determine the fair market value, which was the 1.2 million. And then our annual value on that 1.2 million would then be 144,000. But then they told us that they only gave him 2/3 of that commercial building, right? So we need to determine the user fact on that 2/3 and not on the full amount. So we need to first apportion the annual value by the 2/3, and that would give us 96,000 Rand. Then we need to determine the shortest of the life expectancy of the donor, the donee, and any specific period. So we don't have any specific period, so we can ignore the third one. The next birthday of the donee is 36 years old, and then the donor is 74. So the person with the shortest life expectancy would then be the donor. So we would use his factor of the 4,878.76, which we get from our table, and we would multiply that by the 96,000 Rand, and that would give us the 468,361. Yes, Nonhlanhla?
Dineo,
Yes.
they're saying the next birthday. So if we're using the 1949, the next 2024 minus 1949, the next birthday is 76.
Father.
If we're using the if we're using the 1951, the next birthday is 75.
Where will it be that the next birthday is 74? Because that's what they wanted to do. Itaba, which year is that? 1948. No, that's even worse. 1951. 1951. Okay. Thanks, Nonhlanhla. 1951, the next birthday would then be 74. Yes? Nonhlanhla, you're the one with the calculator. If we use 1951, then his next birthday would then be 74.
Yes.
Yeah. Yeah, that makes more sense. Let's use 1951. So that is how we got to the 468,361. Is everyone comfortable with this calculation of the user fract?
No.
Okay.
I'm lost a bit.
Yes, let's find you.
Yes. The 2/3.
Yes.
Yeah, when you're calculating the annual value, why are we now calculating the 2/3? Oh, okay.
All right. Are you found now?
Yes.
Okay.
Thanks.
All right, awesome. I'm just gonna do that.
Sorry, ma'am.
Yes.
Sorry, ma'am. Before you continue, I actually have that question. Why are we timesing by 2/3?
Okay.
The 2/3 here. Oh, okay. No, sorry. I just see the question now.
Are you found?
2/3
Okay.
Commercial. Yes.
Okay.
Thank
Awesome.
you. I just
Okay.
forgot what the question said.
That's fine. So the reading is the problem that we have when we are reading very fast in the exam. So we need to make sure that we highlight the things that are important or the information that is important to us so that we can answer our question correctly. There was another hand. I missed it. Charlotte? Go ahead, Charlotte.
Dineo, I just want to ask, why are we calculating the 2/3 before before the factors? Why are we not doing the 2/3 after doing the whole calculation, and then we take the 2/3?
Okay. I understand your question. So if now we are saying we're giving you a property, né? And then we say, but we're only giving you half of the property, or we're giving you 2/3 of that property. Is it fair to use the full value of the property to determine the donation? I'm only giving you 2/3 of that property, né? And we need to work out my donations tax on the value of the property. So we need to first reduce the value by the 1/3 that we're not giving to you, or we first determine the 2/3 that I'm giving you, the value of those 2/3 that I'm giving you, and then you can then work out the factors on that annual value. Remember that the annual value is the value of the property. So it's what so you cannot take the 2/3 on the factors. You must first reduce our fair value, our annual value that you use this thing, the 12%, instead of the amount after taking into account the factors. If we use the factors, then we're going to end up charging this person more than what they were supposed to, or less than what they were supposed to if we use this, we only divide it at the end. So you must take it on the value or the
property.
the value of the property.
Oh, okay.
Yeah.
Okay. All right. Thank you.
Right.
Understood. Thank you.
Okay, awesome. Thank you, Charlotte. Is everybody happy with the 2/3? Are we comfortable? Can we go on?
Yes, thank you, ma'am.
Perfect. So there wouldn't be any exemption on this transaction. So the taxable amount would then be the 468,361, and we would tax it at a rate of 20% because it's still less than the 30 million rand. Okay. Awesome. Then this, yes, Mianka.
Yes, ma'am. I just wanted to ask: do we only use that table B, when we're dealing with the usufruct and the bare dominium? We don't use that table for anything else, really.
Table A.
Table A. Yes.
Yes. Yes.
Okay.
So, yeah.
Thank you, ma'am.
So if you're using, you will use it for these like interests. Yeah, that's what they said. These interests, the usufructs, your fiduciary interests, your bare dominiums. So that's when you would use it. Okay.
Okay. Thank
Awesome.
you.
So then now we have on the same day, they tell us that he donated to Bakis, his nephew, who is 16 years old, 2/3. I'm going to highlight this again. The 2/3 in the share in the commercial building, highlighting it, and that is subject to the usufruct of Gary's. Ne? So how do we then determine the bare dominium? How do we calculate it? What will be different from the calculation that we just did of the usufruct?
Are we not working? I think we have to use the other one, the section 18A, because it's a it qualifies as a public benefit organization. Then the whole 25,000 is fully exempt.
You are lost. Who's speaking now?
It's Nonhlanhla.
Nonhlanhla, we are still at number 5. We are here by Baki.
Oh, we're not on number 6.
You are very far. You are at number 7. You're very far. We'll come back to that. Mianka?
No, sorry, ma'am. No, I read the first part wrong. I was going to say something, but it's wrong.
Share with the class.
Oh, I thought the bare dominium was for the full building and not 2/3. So I was going to say, oh, this time you don't times by 2/3. But
Okay.
The bare dominium is still 2/3.
Okay, awesome.
Yeah.
Charlotte?
I think the difference will be that we will use the life expectancy of the donee.
Thank you, Charlotte. Charlotte, you heard me. You heard me when I was speaking to you guys. Thank you so much. So when we are now calculating it, it would be for the life expectancy of the donee. So it's the person who is using the usufruct. Ne? So in this case, it would be Gary's life expectancy of 35, and we wouldn't use what's his face's Jake's life expectancy. So we do the same step. We determine our fair market value, and then the annual value on that fair market value at 12%. That would still give us the 144,000. But remember, they told us they only gave us 2/3 of the building. So we would then calculate it at 2/3, and that would give us the 96,000 Rand. So we determine the shortest of the life expectancy of the usufruct holder, and then any other specific period, but there was none in this case. So the donee, which is Gary, his next birthday would be 36, not 35. Let me change that. That would be 36. And then from the table again, we would get a factor of 8,13647. I hope that's correct. Let me look at that. I'm starting to doubt myself now. Yes, it's correct. Okay.
Who is the donee?
It will be, so the donee in this case would be the usufruct holder is what's his face? Gary. So you would ignore the person who's making the donation. So you'd only look at the person who's using the usufruct. Yes. I missed your hand.
In this scenario, who's back?
Baki is the bare dominium holder. So what you want to determine is the life expectancy of the person who has the usufruct, because you must take the usufruct out of the fair market value. Okay, awesome. So we would use Gary's age because he's the one who has the right to use the income or the fruitage that comes from that property. So you would then determine the usufruct holder's life expectancy, and then it would give us the value of the usufruct of 781,101 Rand. So we took the 96,000 multiplied by the factor of 8,136 and 47. Then for us to get the bare dominium, we have to take the fair market value of the portion that we are giving to a Baki, and we would then, we would take the 1.2 million multiplied by the 2/3 first. That would give us 800,000 Rand less the usufruct value of 781,101 Rand. So that means our bare dominium is only 18,899 Rand.
No, sorry, ma'am. I don't really have a question. I just want to clarify something.
Mm-hmm.
So if we working out the bare dominium, then we have to determine the shortest life expectancy between the donor and then the bare dominium. And then if we determining the usufruct, then we only take the usufruct's life expectancy. Am I correct in saying that?
No. So when we are looking at the usufruct, we look at the shortest of 3. So it would be our donor's life expectancy, the donee's life expectancy, or any specified period. Then when we are doing the calculation for the bare dominium, we only look at the donee's expected life. Oh gosh, that period that they're still expected to live. So you would look at that, the donee, the person who's got the usufruct or the holder of the usufruct, their life expectancy or a specified period. So in this instance, they didn't give us a specified period. We only have the usufruct life expectancy. So we would use Gary's life expectancy.
Okay, that makes a lot of sense. Thank you.
So in this, awesome. So in this one, you would ignore the donor's life expectancy. You would only look at the donee's life expectancy.
I see. Thank you.
Okay. Awesome. So for this transaction, there wouldn't be any exemption. So our taxable amount would be the 18,899 Rand. And the donations tax would then be at a rate of 20, and that would give us 3,780 Rand. Okay. Ooh, now we move to the next number 6. They tell us that on is everybody comfortable now? I'm moving on. I hope everyone is fine. Okay. On the 15th of January 2024, Jake Black won 65 million in a lottery. On the 31st of January 2024, he donated 30 million to his only grandchild, Pearl Black, the daughter of his predeceased son. How do we treat this transaction?
The whole of 30,000 will be subject to 20% of, is it 30,000 or 30 million? 30 million.
Yes.
30 million will be subject to, is it 20% of donation tax.
The full 30 million.
Yes. Well, I'm not sure.
No, he's
Okay.
gonna get an right of 100,000.
Who said that?
No, Lwazi, sorry.
No, Lwazi, is the 100,000 still available? Did he not use it all?
Oh.
Remember, he used it all by the second transaction. Was it the second or the third?
Oh, sorry. Yes.
The fourth transaction.
It has
Yeah,
to be 25% because the amount he donated is more than 30 million.
Okay, so where do we? Okay, I'm gonna ask you a question just now. Segwere. I'm so sorry if I'm saying it wrong. Correct me.
Hi, Dino.
Hi.
I think because can you go back to the question again?
Yes.
Okay, I think now it's gonna be, because it's 30 million straight, so I think it's gonna be limited. You have to calculate the 20% of the amount. That's the amount which is gonna be exempted.
Exempted or taxed?
Or taxed, yeah, sorry, taxed.
Okay.
Yeah.
All right.
That's it.
Okay. Now my brain has lost me a little bit. Who was I speaking to before Segwere?
You were speaking to me.
Sorry, Nolwazi. Okay. So you had said we are gonna. What did you say before? I should have wrote it down.
Oh,
sorry.
I had said that the donation that he made of 30,000.
30 million.
30 million, sorry.
Mm-hmm.
More than the 10,000 that is specified. I'm just not too sure. I think it's section 56 of the Act. So he's going to be liable for donations tax of 25%.
Okay. All right. You are 50%. Okay. You are almost there. So yeah. Let's see. What does the section say? Section, which one is it now that tells us the rate? Section 64 tells us that in aggregate, if it's less than 30 million. So if all your donations for the year, every one of them are less than 30 million, then we would tax you at 20%. Ne? So everything up to 30 million. When you hit 30 million, we tax you 20%. Ne? Now, when you are at 30 million and 1 rand, or even and 50 cent, the 50 cent would then be taxed at 25%.
Oh, makes sense.
Ne? So anything in excess of the 30 million, we would then tax at 25%. So now we need to determine how much he's already donated throughout the year. So we would take first the 72,000, because all the others were exempted, ne? So those ones we would not include as part of our calculation. So we first take the 72,960 plus the 68,361 rand, plus the 18,899, and that would give us an amount of 560,220 rand. And then we would less that from the 30 million to see how much we still have available to be taxed at the rate of 20%. So that would give us 29,439,780 Rand. We multiply that by 20% and it would give us a tax amount of 5,887,956 Rand. Whew. Then, now, the amount that is in excess of the 30 million Rand would then be the 560,220 Rand, and that we would multiply by 25%, and we would get a tax amount of 140,055 Rand. Whew. All right.
Oh, okay.
Is everybody happy with that one? Does it make sense? Awesome. Thank you, Nolwazi. She said we are fine, so we are moving on to the next one. The last transaction that took place on the 1st of February 2024, he donated 25,000 Rand to UNISA. The university used the donation to subsidize the salary they were paying to one of the professors in its department, in the Department of Taxation. UNISA qualifies as a public benefit organization. Nonhlanhla, now is your chance to shine.
I was such a great. Okay, because it's a public benefit organization, they qualify for the Section 18A. So the 25,000 will be fully exempt.
100%. So there wouldn't be any donations tax payable on that transaction in terms of Section 56(1)(h). Thank you, Nonhlanhla, for that. So that is our this is our example of donations tax alone. Is everybody happy? Are you comfortable? Can we move on to the next example? We might not be able to finish everything in that example, but we will try our best because we have 29 minutes to finish everything. Do you guys feel comfortable with what we've covered so far? Just the thumbs up. Yes, Nikla.
Sorry, Janelle, I'm trying to act smart here. Please help me on item 6. I'm lost.
Item 6.
Yes,
the 30 million.
Please take me to... Yes.
Okay, awesome. Let's go back. So the Act tells us that if you get, or if you make donations there, everything up to 30 million Rand, we will tax you at 20%. If you exceed that 30 million Rand, everything in excess of the 30 million Rand will then be taxed at 25%. So Mr. Jake Black, for this year, he's already made donations of the 560,220 Rand. So everything, so those donations were already taxed at 20%. So now we want to determine how much is still available from the 30 million that we can tax at 20%. So we take the 30 million less the donations that we've already made for the year of 560,220 Rand. And that gives us 29,439,780 Rand. And then that we would multiply by the 20% because that's how much you can still, it's still available for us to tax at the rate of 20. And that gives us 5,887,956 Rand. Then there's still a portion that we haven't taxed. That is the 560,220 Rand. That is in excess of the 30 million for the full year. So this 560,220 will then be taxed at 25% because it's above the 30 million threshold for 20%. So then now we will tax it at 25%. and that would give us the 140,055 rand. Nicola, are you okay?
I get. Thank you.
Okay, awesome. Thank you. All right. So now, hi, Larato.
Hi, Dineo. Hey. So, which means maybe in the exam, when they send you a question, you must just when you answer all the questions, remember that the person is for everything. Like for instance, now you can forget that on number 1 what you did there, and then you're just answering the number 5 just from number 5. So yeah, I think that's how they trick us. So that yeah, hey, yeah, ne.
So it's
Okay.
important to have some sort of calculation with you. You could add another column and name it your aggregate taxable amount, so that you can see what you've already included as part of your donations for the year. So you can then have it as a total already before you even get to this 30 million rand. So you already have that 560 sitting somewhere. So you could have an extra column where you have total taxable amount for the year. So then you can then see, you can keep track of how much you've actually included as part of your donations.
Thank you.
All right. You will be fine. You see, this is the platform for us to make all the mistakes, because the more mistakes you make while you're preparing for your exam, the more likely you are to remember the mistakes that you made. So you will be ready when you go into your exam. So this is our platform to make mistakes so that when we go right, we don't make the same mistakes again. Okay, awesome. Hi, Andile.
Hi, can you please go back to the solution a little bit?
Which part?
The part where we're calculating the 30 million. Yeah, I wanted to ask, since we calculated the 25% on the 500 and something thousand that was in excess, but those amounts, when I look at the solution up there, they were also calculated at the 20%.
Oh, okay.
Yeah, I'm a bit lost with that, especially the 72 I see there on the other side. It's also calculated at 20%, and that 400 and something.
Yeah.
We also use those amounts to calculate the 25% at the end there. I'm a bit confused.
Okay. So what happened here, this 560,000 is not the same 560,000 that you see here. Ne? It's just the amount above the 30 million. If there were other additional donations that took place after this 30 million, those amounts would have also included in the 560,000. But in this instance, we only stopped at the last transaction was the 30 million. That attracted tax was the 30 million. The other one doesn't attract tax. So had it been that this donation, this 25,000 was not to a public benefit organization, then that would have also been taxed at 25%. But because now it was an exempt transaction, they didn't have the 25%. But in this instance, this 560 is the amount above the 30 million rand. So everything, excuse me, that you see here, this is the 30 million rand that qualifies for 20% in donations tax rate. But everything after the 30 million is then the 560 is going to be subject to tax at 25%. It's not the same 560,000 that was already taxed in these other transactions. It's the amount above, it's the amount above 30 million rand. So if you added all of your transactions you would see that there would be 30,560,220 rand. So then you would take that 30,560,220 less the 30 million rand, and that would still give you the 560,000 rand that you would still have to tax at 25%. It's not the same amount. Andile.
Okay, so if like this amount came before the 30 million, you still calculate and apply the rules as they are, even if you are going to eventually you are going to add all of your donations to see if they are below 30 million or they exceed. You're still gonna apply the rules in these amounts that came before the 30 million that we are dealing with right now.
Yes. So if they had given a donation of, in this instance, if they hadn't given 30 million rand and they had given only 25 million, then everything would have been taxed at 20%. But because it exceeded that 30 million, including all the other transactions that happened during the year, then we need to apportion between what would have to be taxed at 20% and what has to be taxed at 25%. So you first apply your 20% rules, then if it exceeds the 30 million, even if it's by 50 cents, then you must tax it, you must tax that 50 cents by 25%.
Okay.
Are you comfortable?
Yeah, I'll go and work on it again. I will ask questions maybe if I don't understand.
Okay. All right. Thanks, Andile. I hope you do find the answer. If I'm not saying it right, you can ask me again on Saturday when we have our session. Yes, Charlotte.
Dineo, sorry to take you back. Did we use the entire exemption of 100,000?
Yes, we did. We used it at our fourth transaction when we gave Vinci Black. What did we give her? The shares. We gave her the shares of 8 rand per share. So those shares amounted, or the donation amounted to 160,000 rand. And then we first took out the 12,960 from the loan that we waived. And then we were left with an exemption of 87,040 rand. So that is the full 100,000. We used it all here. There was nothing left after that. Yeah. Someone just mute yourself. We can hear Spider-Man in the background. Thank you.
I'm muted, Dineo.
Thank you very much. I appreciate you. Okay. Is everybody happy there? Can we attempt to look at the second question? Sehuere, your mic is still on. Do you want to say something?
No, nope.
Okay, let's just mute you then. Thank you. All right. So this one was a trust and donations question combined. So
hey, Dineo.
Hello?
Dineo.
Yes.
Before you continue, somebody wrote on the chat, Zanele. Please read the chat. I kitty asabuleli because it looks like you're confused.
Oh, sorry, Zanele. Let me check. Okay. Okay, so they're supporting you, but they're not saying what's wrong. Okay, I'm stuck by confusion. How is now 560 above 30 million? I will just wait for the slides and go through. Okay, let's go through the 30 million thing again. Zanele, can you open your mic? Can you speak?
I'm at work, but yeah.
Okay. Let's take it step by step, ne? So what were the amounts that we've already paid donations tax on? We've already paid donations tax, or the amounts that had a taxable amount, ne? It's the 72,960 plus the 468,361 plus the 18,899, ne? So that those amounts, if we add them up together, they give us the 560,000, ne? Oh Lord.
Yes.
Ne? So then, now we want to find out how much have we donated for the full year. We've already donated 560,220. Okay. The Act tells us everything until 30 million rand will be taxed at 20%. We want to know how much is still available from the 30 million rand. Only 29,439,780 rand is available, right? So let's see, how much have we already donated? We will take the 30 million rand that we've just donated now, plus the 72,960 rand, plus the 468,361 rand, plus the 18,899. And that gives us a total of 30,560,000 rand and 220 rand. Okay. Are you with me until there?
Yes, I'm with you.
So now we want to find out how much of the 30,560,220 rand is above the 30 million. So we take the 30,560,000 minus the 30 million rand threshold. So let me write it like this. Let's write it as 30,560,000. Those are our total donations for the full year. Okay. So now we want to see how much of the donations that we've made for the full year exceed the 30 million rand. So we take the total donations we've made minus the 30 million, and we have 560,220 rand. Do you understand now?
Oh, okay. No, it makes sense now, because I thought that when you already took the 560 from the 30 million. So it was confusing me there. But now I get it, I understand. Thank you.
Okay. So let me write this so that when you're going through the notes later, total donations.
Hi, Dineo.
Hi.
Okay, on that amount, so are we not supposed to calculate the 30,560 by 20%? We're only doing the total that we got for 520.
Say that again.
I see that for the 25%, we are calculated only the 560,220.
Yes.
I was asking if we are not going to calculate the full amount of 30,560,22.
Oh, okay. So what the Act says is everything above, anything that exceeds the 30 million. What they are saying is the first 30 million that you make as donations, you are taxed at 20%. Anything above that 30 million, you must tax at 25%. So it wouldn't be fair for you to first tax the 30.5 million by 20% and then again by 25%. You must only calculate the 25% up on the amount that exceeds the 30 million rand. So anything that passes the 30 million, you must tax at 25. Anything 30 million and under, you are taxing at 20%.
Oh, okay. Okay, thank you.
Okay, Andile.
Hi, Dino. So are we going to include the amount that we calculated, the 20% on the 72,000 when we're calculating up there?
What do you mean? Say that
when you from the transaction, I saw we were calculating like that 72,000. There's a column there where we calculated the 72 times 20%. So this is where my confusion is, where we calculated the 20% up here, and the very same amounts that we're adding are going to exceed that 30 million, and then we calculate them at 25%. I wanted to ask, since there's these amounts that we calculated on the 20% when we were going step by step with the transactions, are we going to include them on our solution, or we are going to take the 20% that we calculate on the 29 million that we were working out on the 30 million?
I'm not sure if I understand the question, Andile. Let me try and say it back, ne? Are you asking if we are going to be calculating the 25% on the 72 on the 72,000 and the 400,000 and the 18,000? Is that what you're asking?
Yeah, I understand the part that you're explaining, that the amount when we add all of them, it's 500 and something thousand. My confusion just comes to the part where these amounts that we added, we already calculated the 20% up there, and then now they are above the 30 million when we add the 30 million that we got on this transaction, and we are going to calculate 25% on them. So that I'm asking if those amounts up there that we calculated, the 20%, do we include them in the solution, or we take only into account the 25% that we already calculated, which exceeds the 30 million?
Only the 25%, only the amount that exceeds the 30 million. So you don't take this 25% is not on this amount. It's not on these amounts. So these amounts you've already taxed at 20%. They were already taxed at 20%. This portion is the portion that exceeded the 30 million that you haven't taxed at 20%. You are only still going to tax it at 25%.
Oh, okay. All right, thank you.
I don't know if there's someone who can explain it a little bit better than how I'm saying it, because maybe I'm not understanding the gist of the question. Andile, are you really okay? Because I think the confusion is the amount is the same. So that's where there's confusion. Yes, Lerato.
I'm going to try to see if I understand. Okay. I think, Andile, what she's asking is the same amount that we calculated from the first until where we are. We calculated those amount and we did with that 20%. Now, the money that is extra on the 30 million, which is the total of everything that we did during the year, we're now calculating that with the 25%. That's what she wants to know. Or are we not considering what we did? We're just taking what is over of the 30 million, counted with the 25%. Not specific that the first amount, the 72, we calculate 20%, the second with what? We're just looking at how much we over with on our tax year or above the 30 million.
Yes, we're just looking at what we are over with. We are not looking at the stuff that we've already paid the 20% on. So we are looking at the amount that is above the 30 million, whatever that past the 30 million. Don't leave, Charlotte. Whatever we have exceeded the 30 million with, had it not been that this amount was a round figure, then this value would have been different. If, let's say, our figure here was not 30 million, was instead 29 million rand, no, that won't give us exceeding 30 million. Let's say it was let's say it was 29,500,000, and then we added the 560,000 rand. So the 560,000. So the amount that we would have exceeded the 30 million with would have only been 60,000 rand. So the 60,000 rand would then be taxed at 25%. So in this instance, because it was a round figure, it makes it seem as if we are paying 25% on the same amount that have already been taxed at 20% above. But had it been a different figure of 29.5 million, then it would have given us a different figure so that it would, so for instance, in this case, the 29.5 million plus the 560,000 would have given us an excess amount of 60,000 rand, and we would tax that 60,000 rand by 25%. So then it wouldn't be the same amount again. I don't know if that example makes it a little bit better. Charlotte, please go ahead.
Hi, Dineo.
Hi.
It's like you were reading my mind, because I kept on listening to the questions. I think the confusion is that the threshold is the same as this contribution for PEL Black.
Yes.
So yeah, so exactly what you were saying now. That's the example that I wanted you to make. That if this 30 million of the last donation, if it was 29,500,000, then I think the explanation will be a bit clearer, just like you did now. You're just reading my mind. Thank you.
Thank you, Charlotte. Andile, and who else was it? Rose and Zanele. Does it make sense when we use the 29.5 million example?
Yes.
Yes, it does.
Okay.
Thank you.
Thank you, guys. Ladies and gentlemen, we have 3 minutes. I think maybe the best thing is for us to go through the second question on Saturday, and then we will then attempt to then move on to estate duty, if that's okay with you guys, because we have 3 minutes. There's no ways we'll be able to do the question in 3 minutes.
Thank you, Dineo. Thank you, guys. Good evening.
Thank you.